Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Chuck Fuller, Portfolio Manager at Nasdaq Dorsey Wright, to discuss asset class and sector rankings as U.S. equities retain the #1 spot. Chuck, it's great to see you as always. Welcome back to Trade Talks, and not a surprise that we're seeing equities in the #1 spot, considering the performance that they had to close out the year.
Yeah, obviously, U.S. equities have had remarkable performance over all of 2023, and I'd say especially over the final 2 months, kind of off that October bottom. Just here in the last month, we've seen the S&P gain about 3%, and so it's definitely stayed at the #1 spot in our rankings, and really has increased its lead over international over the last month. And we're seeing some really interesting things. A lot of people, a lot of our clients, are wondering, has it reached the top here? Are we destined to pull back and have, kind of lower returns from here on out? And we're seeing some things to suggest that that's not necessarily the case. Certainly we're overbought here, but a lot of times when the market gets really overbought, it's actually a bullish thing. It's kind of counterintuitive, but that's kind of how it works. And so some of the things that we've seen where the market is gotten, extremely overbought to the upside, would be something like the percentage of stocks moving above their 50-day moving average on the S&P. That hit 90% here recently, and it's pretty rare reading. You don't see it a lot, and typically when you do, especially when it moves from a really low value like it was at, because it was below 10%, to a really high value like this over a short period of time, you tend to get really good forward returns, somewhere around like 20% a year. On the 4 1-year returns. So we feel pretty good about that.
So would you say in the short term, at least, that we are overbought, and what would be some of the more technical levels that you're looking at?
Yeah, so over the short term, yeah, we're definitely overbought, but we could see a move down to, let's say, like 45, 60 on the S&P, and that would be perfectly normal. That's just part of we always say that the market inhales and exhales, and that would be a perfectly normal exhale.
What are you seeing in terms of the international equity space? Where are the rankings there?
Yeah, so international still at #2 in our rankings. It's kind of lagged U.S. off the bottom, which isn't really a surprise. Typically, really ever since 2008, it just seems like international can't make any headway against the U.S. except for like short periods of time. So yeah, we're kind of seeing the same story there. In terms of what to buy in the international space, it's kind of been the same that it has been for most of let's say the last year or so. Emerging markets, but specific places within emerging markets. So like emerging Europe and Latin America have really been the areas of strength, and then followed by like developed Europe at, let's say, #3. And really, Latin America has been really interesting. It's been picking up some of the slack that we've seen emerging Europe slip a little bit, but the whole Latin America region the last month or so has been up about 5%, and some of the countries within there have been up like 15 to 20%.
And let's talk about fixed income here. I think the move, or the rate at which we saw the move in fixed income, certainly over the past 6 to 8 weeks, was quite remarkable.
Yeah, it really was. The 10-year, had a dramatic decline after the Fed meeting, and we've got down, obviously below 4%. We got to a very oversold reading on here where we're kind of overbought on the equity side, and so in a similar way, we could see a move back to, let's say, 4.25 on the 10-year, and that would be completely normal. So it remains to be seen. We could keep going down with yields. The market certainly thinks, or certainly has that priced in. But if we get back to 4.25, I wouldn't let that make you think that inflation's coming back and it's gonna get us back to above 5 levels. But within fixed income, what we've seen is that high yield still at #1. And it was probably the best performing group over the last year, along with convertibles. And we've seen some improvement from long duration treasuries as they've started to move off the bottom a little bit. They're one of the more sensitive groups to interest rates in our subgroups. Of course, they've had an absolute terrible last 2 years, so it's going to take a little bit more to see them kind of move up our rankings a bit.
And finally, Chuck, a quick update on what you're seeing in the commodity space.
Yeah, so commodities, they are at number 3. That's where they were last month. So, we've seen some changes there in terms of, precious metals has moved up to number 1. We've got energy at number 2, agriculture at number 3. Energy had been, moving up towards the end of last year, but precious metals have kind of come on of late to take over. And when we look at individual commodities, over the last month, we've seen some names in the energy space, like natural gas, which has had an incredible month. It was up 34%. It's already up 25% year to date. So that's something to watch out for. And kind of on the other side, orange juice was a commodity that everybody was buzzing about last year, had incredible returns. Probably saw the steepest decline over the last month at almost down 18%. So interesting things to watch out for.
All right, Chuck, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.